We made it. We made it through 2022, fellow traders and investors, and now the year of 2023. I think my old Boy Scout motto really fits for 2023, which is be prepared. I'd like to share with you in this presentation, which is thanks to StockCharts.com, what I think are the things we have to be prepared about, and some of my larger expectations of what I'm looking for in 2023. So with that, let's get to it. First of all, I'm not a guru. I get so many emails, Larry, you weren't exactly right on this market. We didn't get a Christmas rally as strong as we did. Guys, I'm a trader. I'm not perfect in this business. This is what I do. My approach is to look for high probability trades that a market will rally or decline at a certain time. That's it. I'm not a savant. I'm not a psychic. I play the odds based on observations of the past. Those observations of the past usually work, but not always. It's been that way for me for over 60 years of doing this, and it's the same way for you. There are no savants to this business. It's a business of being right sometimes and being wrong at other times. Well, what do we have to be prepared for this year? I think clearly inflation, and the other part of inflation, of course, is interest rates. Interest rates really had a havoc with the market this year, or in 2022. And I think we're going to see more Bitcoin problems. So I want to talk about all those. And the big thing is the recession. People keep talking about the worst time in the last 25 years or 80 years, depending on who you talk to. And this is such a buzzword. So we're going to look a little bit about this, see if there's a reality to that or not. So let's look at inflation. This is an intriguing chart to me. The black line is inflation itself, going all the way back to the 1970s. The red line is the cycle. We can figure out there's about a 5.5-year cycle to inflation. And that means we can use that inflation cycle to tell us a lot about not only inflation, but other markets. Let me show you what I mean. So here's the inflation cycle again as we come current. There was an inflationary low in the cycle in 2020. Well, look where we are now. We've actually started to roll over. This is the rate of change of inflation on the black line, and it's already started to come down. So it looks like we should start to see inflation go lower. Now, if we look at the inflation cycle from the past, it usually takes a couple of years before we get really low levels of inflation. Cycle high a couple of years later, cycle high a couple of years later. So one of my errors for 2022, I thought inflation would come right down like that. It didn't. I did right. It takes time for something as big as inflation to come down, but the overall move for inflation should be to the downside, which means the Federal Reserve, if they do increase rates again, will probably be small and not consistent. And that's bullish for stock prices. We can also use that inflation cycle to look at the price of gold. Now, the blue line that you see here is the price of gold. And again, the red line is the inflation cycle. Oh, so we're at inflationary lows. Gold actually didn't rally during inflation. This time we had an inflationary low and gold rallied. We had an inflationary high. We did expect gold to decline, and gold did decline. So maybe we can get some suggestion from looking at inflation cycle as to what gold will do. In the 1990 to 2000 time period, we had a big up move in inflation, not much in gold. But in 2004, we started to see that inflation cycle pick up, and so did gold. However, and this is really interesting, maybe when inflation came down, gold continued going higher. Look at this. It just continues going higher until the next inflationary low, and gold takes off again. The commonality of gold is it's supposed to be backed by inflation. When we inflate, gold will just scream to the upside. When we deflate, it won't. And that's not quite true. Sometimes it is, though. In 2012, that inflationary cycle we see in red was clearly the downside, and gold came down. It was starting to pick up in inflation in 2015 and 16. Gold just kind of wandered around. Then in the 2020, gold ran up, but as we started to inflate, gold came down, which is really interesting. Here's the inflationary cycle that we see now, just so you can bring up the speed where we are. If this is what I think will happen to inflation, and it is, that's the master cycle, if you will, of inflation. Gold's probably going to have some of the same problems that it saw in the past when inflation came down. So it's going to be the runaway bull market for those afternoon talk time conservative radio guys talk about? Probably not, because one of the legs of the stool that gold stands on, inflation, is not going to be with us as it has been in the past. We can look at crude oil too, because crude oil is very inflationary. Now we're seeing crude oil in blue, and that inflation cycle we talked about in red. And you can see they pretty much go hand in hand with one another. In fact, it's probably because the crude oil has been such a huge influence in the CPI index. It's a little hard to draw direct correlation. But when that cycle is low based on inflation, crude oil rallies. When the cycle is low based on inflationary cycle, we should see crude oil rally and crude oil get rallied. So there does seem to be some commonality, some insight that we can learn from the past about what may happen to the price of crude oil. And here it is right up to date for you, right up to the cycle low that we expected in 2020 would come up, and now that cycle, the inflation cycle is to the downside, and it does in fact look like we're starting to drift back to the downside. So crude oil prices in another rock and roll big bull market at the upside, probably not. Probably more like what we've seen when inflation has been to the downside. Well, interest rate, this is really interesting. Hold on to this chart for a moment. I'll explain it in depth in the last chart. So what we see is the stock market in black and interest rates in green. And there's supposed to be, or is, a direct correlation between all these. Notice that stocks rally, bonds rally, stocks rally, bonds come down, stocks come down. And that seemed to be pretty consistent just before the 2009 low. Stocks, the green line, bonds turned to the upside. These are inverted scales, of course. And you see a pretty good relationship how these things move. This should be a buy area for stocks. It was. A buy area for stocks. It was. Sell area sideways. It was. So good correlation, it looks like. Here we see, getting to a more current time period, they look like they move pretty much hand in glove, except I moved bond prices forward about a year. So all these lines that you saw in the past, this line was known a year prior to stocks topping out. And maybe get a better view of it here. This is one of the things that worries me about the stock market at this time. There's been a pretty good relationship between these that suggests we can rally for most of 2023, then some selling pressures in the market, just as we saw here and over here. Clearly, this is not a precise timing tool. It's a long-term synopsis of what may happen, but we may have some problems later in 2023. We'll just have to look at the rest of the numbers as they come in. But this is the biggest negative that I see. One thing we need to be prepared for in 2023. So inflation buy signal for stocks. This is, you are going to love this. I was so happy to figure this one out. We did this just a few days ago. I looked so much at inflation in the stock market and trying to find correlation between them. I can't tell you how much time I spent on that. I finally pounded a really, really simple rules. It began with the idea that downturns in inflation are bullish for stocks. When inflation rolls over and we start to deflate, if you will, have less inflation, stock usually rally. Well, you go from that general concept to we need some rules. We need to make this specific so we can see if this works or not. There it is. Really simple rule. When we have 3 consecutive months down in the rate of change of inflation, that's the 12-month rate of change of inflation buy. That's it. Now you can add a little bit to it if you have you're down in a flat month. You're not going to count that. Another down month, that would be part of your 3 months down. And probably matters if we're in a high inflation area or low inflation numbers. You can play around with that on your own. But let's just look at the simple rule for now. When inflation is down 3 times, what happens to the stock market? And by the way, here's a view of inflation throughout the world. Look at Europe. Well, they're really continuing to inflate. The United States has come down. We're not inflating. We've already rolled over here. Japan hasn't. Europe hasn't. So the good news is for those of us in America, it looks like inflation starts to be under control. And notice this, in the past, when inflation, look at the red line here, when inflation comes down, it peaks. It doesn't just come back right away. The fact that we peaked tells me that inflation is going to continue to the downside. Okay, here's a simple rule. We have inflation rate of change down 1, 2, 3 months in a row. There's your buy signal. 1, 2, 3 months in a row. There's your buy signal. 1, 2, 3 months in a row, there's your buy signal. 1, 2, 3 months in a row, there's your buy signal. Even over here, where 1, 2, finally we come down, there's your buy signal. 1, 2, 3 months in a row, inflation has come down, there's your buy signal. I think we have a pretty good little indicator. Look at that 1987, before that huge up move in the market, inflation came down 1, 2, 3 months, and a big rally in the stock market. So if you believe, as I do, that inflation does affect stock prices, I think we have some really good messages for us here about what to expect if we can look at the rate of change of stocks versus inflation. Now, here it is again in 1997, 1 flat, 2, 3, market low. Now, since we've been coming down, does this matter? Maybe 1, 2, 3 times. Yeah, good time to buy stocks. And the 2001 market, 1, 2, 3 times, a little bit before the low, but a good point to buy. 1 down, 2 down, 3 down. Oh, great point to be a buyer of stocks, right? So I think we've got a pretty good operative rule here for a general idea of when the market is set up to rally or decline. Here it is again, 1, 2, 3, and we're down. The market rallies. 2008, 1, 2, 3, we're down. A little bit early, nothing is perfect in the world. 1, 2, 3 again, right at the low in the marketplace. I think this correlation I found, look again, 1 flat, 2, 3 down, right here. Good point to be a buyer of stocks. Back over here, the same thing. In 2017, 1, 2, 3, rate of change, inflation down. Wall Street said, hey, we're starting to have less inflation. That's bullish for stock prices. The stock prices went to the upside. So yeah, that was bullish. And here's where we are now. The most recent signals have been 1, 2, 3 down. That was a 2019 low. Look at 2020, 1, 2, 3 times down, just almost at the exact low. Remember, we're using monthly indicators here now. This is not weekly. This is not daily, but monthly. So where are we right here right now? 1, 2, 3. Oh, right at the low. So guys and gals, we have an inflation buy signal for the stock market. Once inflation starts to roll over, as you've seen, we typically see stock market rallies. I think this is one of those be prepared things, the old Boy Scout motto, right? We have a buy signal here from some really fundamental data, and it appears the rate of change in inflation will continue going down, which means less Fed hikes, no consistent 3/4 of a point hikes anymore. That's got to be bullish for the stock market. I'm going to expand that view a little bit so you can see more examples of it. You can see how it comes down, buy signal, comes down, buys. There's the buy, there's the buy. There was a buy right here, and just the buy that we recently saw. And the fact that we continue coming down, of course, is bullish, right? You see these long terms when we keep coming down for a long time, that's bullish for stock prices. So we clearly want to continue to watch the inflation indexes. Now, there's a couple you can watch, the CPI from the Federal Reserve System. The New York Fed also has their inflation index, and I found that to be the best one to follow for those who like to really get into all the facts and fancy numbers of all this stuff. So that's one that I really like to watch in the marketplace. Okay, well, how about gold and inflation? Can we pick up any more there about gold and inflation? Yeah, we can. I'll get a little bit ahead of you to show that gold, that's the red line, actually leads inflation. So we'll go back and look at that again to give you an idea of that. So here's gold, and we just moved the price of gold forward. When gold comes down, inflation comes down. Gold comes down, inflation comes down. Gold comes down, inflation comes down. So gold comes down, inflation comes down. Inflation comes down. They go up together over here. But this is the picture to keep in mind right here is gold. Here we go. You can see how it looks like they move hand in glove with one another here. That's because I put the price of gold out forward into time. Gold appears to be a predictor of inflation. And on that, the news for inflation would be down and certainly not screaming choppy, maybe a little bit, but with a downward bias until late 2023. So if you want to get a sense of where gold, where inflation is going, look at gold. And that sense tells us now expect inflation to continue to the downside. Well, as long as we're talking about gold, I want to show you and talk about my bet the farm buy signal for gold. Now, it's very unusual that I'm going to ever tell anybody to bet the farm. I remember I did it one time in 1982 when I wrote the book How to Prosper in the Coming Good Years. I said, buy Apple stock again, then mortgage your house and buy more Apple stock, then get a second mortgage on your house and buy more Apple stock, and then get a loan on your car and buy more Apple stock. That was a bet the farm in 1982. Well, the rest is history. I had no idea that Apple would come up with an iPhone and all the other things they've done, but I did think that eventually everybody in the world would be of two classes. They'd have a computer or they wouldn't, and Apple was leading the way. So we have, I think, another condition that we see is very unique in the gold market, but let me explain the red line to you. This is the commercials. These are the people that use and produce gold. This red line is their net position. When we're above the red line, they are net long. Whoa, wow, look when they got net long. Yeah, you could bet the farm. Look when they got long in 2015, late 2015. Yeah, bet the farm. Now, this condition does not occur very often. And when it does, and we're not there yet, by the way, but if we were to see gold, the commitment to trader position get above zero, in other words, they're net long, they're net positive, I think that's a massive buy signal for gold. That's when you want to listen to Sean Hannity and Dick Morris and all these talk time radio guys talking about the gold. And every day they go to gold. They'd rather have your dollars than their gold, I guess, because they're selling your gold and getting your dollars, kind of like Bitcoin was. We'll get to that in a moment. But what we see is that it's very rare for the commercial to be net long. And when they do get net long, if there's ever a vector house, that's it for gold. Now, another indicator that's really simple for gold is to just look at open interest. This is a really good indicator. It's just the total open interest for gold. Notice when it's very high, we're close to peaks. Open interest is very high. The highest have been for 6-7 years here, market top. Same thing over here, high levels, market peak. High level, market peak. Really high levels up here and the market came down. So low levels, the most bullish thing for gold would be low levels of open interest, as we saw over here, as we saw here, pretty low level here. And we've been getting into low levels. I'd love to see us take out this low down here. So low levels of open interest, especially at a time the commercials are heavily long, is really the most bullish fundamental situation I think that you're going to find. So remember, open interest, the total number of contracts are open. What that means is there's a lot of people long gold. And it's not the commercial, it's the public. They say, oh, the gold will go buy gold. And they buy excessively, and market goes from one excess to the other excess, goes back to the downside. But we can also look at my valuation stuff that we have on StockCharts.com. When gold gets overvalued, as you saw here, it comes down. When it's undervalued, we can actually get a valuation measure. This is an index. It's been StockCharts.com. We've been using this for 15, 20 years now. Clearly, we would like to see gold in an undervalued situation, as we see here. This is on a weekly chart. At the same time, the commercials are heavily long and open interest is low. We can also look at my money flow indicator. This is when big money is buying gold, as they were here. As they were here, and recently they moved to the sell side. Interesting valuations in the sell area, and they're in the sell area. It's probably not right here, right now, the ideal time to buy gold. Okay, my forecast for 2023 is ready. In the forecast, my annual forecast, we have the Dow, all major markets of the world, all actively traded commodities, and a lot of individual stocks this year more than ever before. And the fundamental indicators you're going to have to follow that are going to help. Here was our roadmap from the 2022 forecast. So we drift down to a low in about the middle of April. We'll check that out. And about the end of June, wow, look at that one. That was right at the low. And then the October, which is the rally that we saw at the end of the year. So we can get, I think, a pretty good idea of when to expect cyclical highs and lows in the market. That's actually forecastable. I know to a lot of people that's impossible. You can forecast the market. No, you can forecast, and with a degree of accuracy. That's why in our last year's report, we said this is a very long-term view of the market. We should come down from most of 2022 rally at the end, have a mid-year rally, which we had, and then start to rally at the end of the year, which is where we are now. It's kind of what I think is going to happen. I'm going to share more of that, though, in just a moment. I've been doing my annual forecast report for, I think, 16 or 18 years now. So I think we probably have more experience writing forecasts of the market than anybody, and we've got readers in almost every country of the world. People have really enjoyed and learned from the forecast, and hope you will as well. Okay, let's look at the triple Qs. This is interesting. The FANG stocks have been the laggard in the marketplace. You know, the Dow is back up here, but the triple Q and the FANG stocks they're not at all. So what's in store? I think this is what's in store. We're coming a cyclical low somewhere in the first part of January. And then the longer term trend is in blue. So we have an idea of the long term trend and the shorter term cycles. And they start to both get bullish together right around the first of the year. So in the first week or two of January, I would expect we can see both these start to turn to the upside. In other words, that's pretty good news. Okay, let's look at an individual stock so you can see how my forecast look. This is Apple, and this is the forecast for Apple. We're going to rally a little bit at the start of the year, but come down. But here's a better buying opportunities. Should be March and the middle of July. Looking to take profits around the 1st of May and around the 1st of February and around the middle of September. We can get a pretty good idea of the best setup times. And that's what these cycles for. Setups. These are the setup times to look for buys, the best times to expect rallies. We can see that a year in advance. Now we can add the trend to that as well. So we see the overall trend for Apple should be the blue line. So we start to pick up the low down here, we rally, we pick up the short-term cycle. Oh, the March one should be really good and another nice buy with an uptrend. So that's the type of view we can get from the forecast report, which, you know, if you don't have a view, you don't have an edge in the market. If you're just looking at a chart and it's blank, well, I don't know what it's meaning. Well, now, thanks to cycles, and I am using timing solutions here, by the way, to do my cycle work, we can get a pretty good idea of generally what's going to happen in the future. And then we can go to StockCharts.com and say, oh, the insiders have been buying here, they're buying Apple here, buying Apple over here. Then we can combine all this. So once we get into cyclical low, we can get confirmation from valuation. The market's undervalued over here, that's bullish, or whatever other indicators you might have. But we can put all this together. That's how you're going to get your best trades of the year. That's going to be really prepared for the market. So is it all about the economy or not? I think cycles and seasonals and valuation have a lot to do with what actually happens. In a way, I think that cycles are very predictive and you can almost forget news. But if we do look at some things like the Consumer Confidence Index, which has been coming down, look at this. It started to come back to the upside. The most recent readings from the Consumer Confidence Index is up sharply from 101.4 in November. The present situation increased to 147 from 138. So there are some better expectations here for 2023. Color that bullish. Okay, wow. You've made it this long with me. Wait till you see this. This is the 60-year cycle in the Dow Jones Industrial Average. Kind of visualize this. We have this little rally to a new high, come down, and we make a lower peak. But notice what happened in 1906. The market started to come down and went sideways for quite a while. But we have made a higher high on the cyclical peak. And then once the cyclical peak was made, it was quite a while before we got into the market low. And if we come forward in the 1960s, here's that little double peak that we saw. There's the lower high and there's the market. And it was quite a while, about 6 years again, until we made a significant market low and the market went off to the upside. This 60-year cycle seems to be pretty operative. Here's a big picture of it. So here's that little double dip. There's the cycle high that we're approaching soon. I'll show you that. Then we go sideways for quite a while and then a blast off. Now, this is intriguing to me because we saw this pattern again. Let me show it to you. Here it is, 1960s. Here's that little double thing. There's what should be the ultimate high. And just like in the 20s, we went sideways for a long time and then we blasted off. So we have this cycle high. Finally, we get a cycle low quite a few years later, 6, 7 years later, and then we big move to the upside. And we have 1, 2, 3 down moves to get into this really good buying opportunity. So here's this high, 1, 2, 3, and there's the buying opportunity in 1974. I know, what does it look like now? Well, whoa, look at this. There's that little double peak thing, rally up to this peak, and then we come down into that long drawn out move with the low to come quite some time from now. So if we add 60 years to 1982, that was the 82 low, we're at 2042. God willing, we're still alive to trade the market at that point. But I think there's some real power to that cycle in the marketplace. So the suggestions were up to a peak in early 2026. This peak is about 2026. We're bullish now up to 2026 or so. And then sideways for maybe years of action. That's going to be a really interesting time period to live in. Those times where we're in this type of a trading range, which is what we saw in the 1930s as well, this type of a trading range. Looks like we may be getting into a massive trading range starting a little bit later. Now, what is this 60-year thing all about? Is something very just dreamt up? I would refer to you an interesting paper, The Origin of the Climate Oscillators. The existence of a 60-odd year cycle and the temperatures proven by figure 10b, you'll show that in a moment. It's almost perfect correspondence between 1880, 1940, and 1940, 2000 time periods. And there's the cyclical and weather. Look at that. So there may be some reason to explain this 60-year phenomenon that we just saw in stock prices. If you want to get the paper itself, I'll let you just look at that for a little bit. You can copy the op-eds from the Coronado, California Ekram Lab and the Duke University Department of Physics. Pretty interesting data here confirming about a 60-year cycle. Okay, look a couple more forecasts. This is Cigna. Cyclical low coming up right after the first of the year, and then in June, and then in November. So if this is a stock you're interested in, you have a good idea of when to take profits and when to look for buying opportunities. Isn't that nice? That puts us way ahead of the crowd. Then we can add trend to it. Oh, we have a nice uptrend until September. Then we pull back and rally back to the upside. So that's what's in my forecast report. Here's McDonald's, Mickey D, right? We can see we're coming into a nice buying opportunity around the end of January, and the longer-term trend goes up. You can see a pretty good trend fit here. So that gives us an idea of how to trade stock in advance. We get to see what's really going on in the marketplace. Isn't that nice? And then we can confirm that with our data from StockCharts.com, valuation, insider buying it, etc. Bitcoin, they said it was unstoppable. One chart's with 10,000 words, guys and gals. It's over. And, what gave it away? Look at the players in the game. Shaq, Matt Damon, LeBron as financial geniuses. Hello. Oh, and the other genius? Oh, yeah, right. Look at the players in the game. Bitcoin forecast, we're going to rally a bit, but all the way back, no. I think Bitcoin is pretty much toast. Well, it is available. If you'd like to get it, go to our website, everytrade.com. You'll see my forecasts for all the major stock markets of the world, major commodity markets, a lot of individual stocks in this year's forecast. So I hope you've learned a lot today. You've got a little bit of a view of the future here, because if you can see a little bit of the future, you are way ahead of everybody else in the business. And with that, I wish you a prosperous 2023 with good luck and good trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.